Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Carol Massar, along with Tim Stanovic. Let's get to some stocks on the move. And joining us to do that is our own Isabel Lee, joining us in the house. And she is starting with the place that used to, don't know if it still does, had a massive menu.
Yeah, you're right. Maybe it still does. Cheesecake Factory, ticker is cake. When Scarlett saw all my stock options, she said, we're taking a trip to the mall. So, okay, we will start first with dessert.
Cheesecake Factory. For everyone.
Yes, shares are in the red, 0.6% after the restaurant chain's comp sales during the fourth quarter came in below average estimates. So the results spurred a downgrade from Stephens to equal weight from overweight. The analyst there said that same-store sales declined 2.2% in the quarter and decelerated sequentially, and with shares already up some 27% year to date.
Yeah.
He just doesn't see any upside from there unless there is a change in earnings growth year over year. At Jefferies, they said, softer same-store sales in the fourth quarter, given the challenging demand environment, weather impact, government shutdown, etc. But I guess it's not that bad because Barclays raised their price target to $58 from $51. So kind of mixed there. But you're right, maybe they do still have a big menu.
Talia put
What'd you say?
250 items.
I remember it used to be like
a
book. Wow. I used to go because it was kind of good for my little critter who was, picky. And then sometimes my dad was with us and could also be picky.
How was the cheesecake?
You can get a sampler. They used to be able to, and you get all these little ones, and their cheesecake's great.
This menu is huge.
I know.
Okay.
And the portions used to be gigantic too, so you could get 2 meals out of it.
Okay, so when we're done at the Cheesecake Factory, maybe we'll do a little shopping. What's next at the mall?
Walk it off.
We will go to Walmart, which is ticker WMT. It's also in the red. Shares are down by 0.6%. So they issued a forecast for the full year earnings that missed expectations. So Walmart said they need flexibility during this unpredictable times for consumers. So this conservatism reflects just really the state of the U.S. economy. Yes, it's expanding at a solid clip, but you see little employment growth. But it must be noted that Walmart typically starts out conservative at the beginning of the year. Then they just adjust throughout. And they also cited a, quote, hiring recession and pressures on shoppers as they continue to forecast growth that's tough.
But what an interesting day. Like, we've seen quite a swing because this one was up almost 3% at its highs today, yes. And is now kind of hovering near its lows, right?
Yes. So I feel like, it's kind of a mixed bag. Maybe it's not like such a worse report, but it's kind of also a little gloomy. It is viewed as a barometer.
Did they do a mega buyback?
For the broader economy.
$30 billion, a new $30 billion share buyback plan?
Yeah, I think they did. You're right.
Right, they boosted their annual dividend.
No. That's a great ad.
It's a team effort over here.
Team effort.
Listen, they did really well. And I feel like you talk to anybody in the retail space. We talked to Dana Telsey. It's in our weekend podcast and broadcast, which you can catch over the weekend. Cheap tease there. But she, people, they've been doing really well with their digital strategy and elsewhere, right?
Yeah. Look, you do a cheap tease, I do a cheap tease, okay? Kate Gulliver of Wayfair. She just joined us on Bloomberg Business Week Daily. If you missed that interview, check it out in the podcast feed. Wayfair.
Nice.
You could find Wayfair stores at the mall. She talked about some of the physical stores that they're building. Smaller ones in Columbus, bigger ones elsewhere.
I do like a young millennial. Okay. I buy online. I furnish my apartment with Wayfair because it has every price point.
That's what she said.
You can go high and you can go low, and the ticker is cool. Just W. Anyway, so it's not a good day for them because
remember when it used to be like a really cool thing if your ticker was just one letter?
Yes,
it was a big deal. Like Ford,
just W. Can you imagine? And the stock is down 15%. Not such a good day, hitting a 4-month intraday low. So this comes after they said that they expect a mid-single-digit top-line growth year over year for the first quarter. Jefferies considers this to be conservative, and they attribute it to the colder weather to start the year. The company also said during the conference call that their first quarter gross margin will likely be at the low end of the 30 to 31% guidance range. So, I like this. William Blair said, it's a solid print with nothing major to complain about. But I guess, it just didn't meet a lot of the expectations. And that's just what this earnings season and the past has been about.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.